Hello traders, Jason here with SwingHigh.com. It is Thursday, March 17th, 2011, and in this video I'm going to do a broad market overview or review for you. As you can see, this is the S&P 500 tracking ETF, the SPY. The past few months, well, more than that, past 6 months or so, we've been in this rising wedge. And I've been talking about it for some time. I remember mentioning it back here at the end of January, but we've finally broken out of that. And we've done some serious damage to this recent uptrend. That being said, volume is also picking up here to the downside. And yesterday especially, we had some massive volume step in as a selling pressure. But right now, we're sort of holding up. We'll see if we can hold this 122 level. As you can see, that goes back to this swing here. It's not perfect, but that area should be support. And it also goes back to this major swing back here right before we had the flash crash and the other problems in the summer. So I'm watching the 122 level right now. Also, I'm watching, if you see these really fat trend lines I have here, I'll go out to the weekly to show you those. Those capture the entire uptrend we've had since the March bottom in 09. And so basically, in the next couple weeks, if we manage to get down here, if we can break under this 118 area and 122, it's pretty much game on for the bears. We're under a lot of support there, and the next significant area is going to be between, well, here at the the 114 area through 105, which was our range through the summer. So yeah, we'll worry about those levels when we get there. Right now, I'm worried about 120 and or the 122 and the 120 area. Basically 122 through 118. Also, something to note, we have an increase in the average true range. It's been going up during this entire period, which means basically you could stretch that to say that that's an increase in volatility, which sort of, I mean, they're pretty much the same definition. The average true range is the range that the stock trades in, well, in this case, a 14-day period. So the past couple weeks, that's been increasing, which is bearish when volatility increases. Also, the RSI has been dropping. As you notice on the SPY, the RSI never really gets above 50, which sort of makes sense because it's a broad market picture of many stocks. But right now, it's been dropping recently, and also the ADX has shown a strengthening bearish trend in the past couple weeks or so. Also, in my broad market review, I want to talk about Japan, just because everyone else is. And what I see here is serious damage to an uptrend. Their market looks a lot like our market, but this recent gap down is huge and has put some serious damage in there. Not, how do I say this? Not too surprising where we stopped. As you can see, this level in here is major support, and that's pretty much the area that we're holding up. So I'm not too surprised in that. Basically, my look on Japan is things are very bad. I'm more worried about the people than the markets, because the markets will be here tomorrow. We don't know what's going to happen to Japan, but that being said, I'm just going to wait and see what happens, and that's my broad market outlook in general. As for the S&P, going back to that, I'm not bearish until we cross under that 118 level that I talked about, and I'm not bullish again until we start strengthening. So right now, I'm probably looking at a month or so, at least when it comes to my trend strategy, of sitting on my hands, and I'm definitely curious to see where the Japanese markets are going to go from here too. So that's my broad market review. Thanks for being a part of SwingHigh.com.